Welcome to another episode of MK Crypto Diaries. I am your host, Dr. Justine Herrera, and today is the 18th of November 2022. Today we will be covering the FTX saga. How does a Twitter feud end up in a bank run on FTX in less than 48 hours? FTX, the central bank godlike figure who was bailing out many crypto players themselves, ended up filing for Chapter 11 bankruptcy proceedings themselves. Mismanagement of the highest levels, including false audits, untrained professionals running the company, and a complete lack of control has resulted in billions of customers' funds being lost. If that wasn't enough, as the story unfolds, we learn that SBF spent millions purchasing million-dollar properties for his friends and families in the Bahamas. The collapse of FTX, one of the world's largest cryptocurrency exchanges, has left an estimated 1 million creditors facing losses totaling to billions of dollars. Here with us today to shed some more light on this story is Samuel Rondot. Samuel Rondot is the managing director of Damex, a digital asset management platform. Damex is a regulated custodian, broker, and OTC desk based in Gibraltar. Samuel's past working experience includes being the head of trading at giants, currency.com and crypto.com. So hello Samuel, thank you so much for joining us and accepting the invitation to join the MK Crypto series and discuss FTX. We're very lucky that we have Samuel here in Malta this week and you can join us live in our mini legal studios. So let's just get cracking. Quite a few questions I'd like to discuss on this recent explosion which took place in the crypto markets. So we've been hearing a lot about, FTX saga. It's all over, socials and news. Could you perhaps, for the benefit of the listener, just give a brief description of what exactly happened in the FTX story? So what is everyone talking about?
Sure. Thank you for having me. Interesting last few months and last few days in the crypto business. For the moment, what we know, obviously a lot of information are coming every single day. What we know so far is that there was two entities, FTX and Alameda. Alameda was the investment arm of their little business. And it looks very clear as of now that some of the funds which were sent to FTX for clients, which are supposed to be segregated and not being used, have been transferred to Alameda for the purpose of covering some investment. We don't know the whole extent of it. There was some rumors that SBF, the CEO of FTX, famous or infamous now, has created some backdoors not to alert his whole team. So far, that's what we know. Basically, a few days ago, I think CZ from Binance, what's this British expression? You put a ferret in a hole and you see if a rabbit comes out. He tries it, and a big rabbit came out, and basically he started a cascade of events.
I know. It's absolutely crazy how we went just from like a Twitter feud to a complete bank run in about 48 hours, which is absolutely crazy, which obviously led to filing for bankruptcy. So you mentioned Binance. It looked like there was some memorandum of understanding where Binance might have been interested in bailing them out or taking them over, but then had a peek and realized, oh no, we're not going to actually go ahead. Do you think Binance actually had an intention to bail out FTX? Do you think there was anything done deliberately due to competition? What is the actual damage that they found in terms of assets? Do you know any figures, perhaps? Balance sheet?
Yes, so I don't know if you probably were born around that time, but George Soros managed to trigger a crisis on the pound sterling, I think 91 or 92. Back in the days, you had an actor which have the means and the ways to be in a certain situation where somebody is hanging over a cliff and you just need to give it a small nudge, and he's diving. For sure, the people at that level, and there was a few rumors from a few weeks already, knew that things were a little bit complicated, to say the least, at FTX. So if you remember, Binance was actually one of the first shareholders in FTX 4 years ago. They receive a substantial amount of money and some tokens 2 years ago when FTX asked them to buy them out. And the last few days before the event, basically CZ started saying that he grew uncomfortable with that stash of tokens from FTX and he wanted to sell them. But the market for that token is extremely liquid. So what happened, we start to see the price tanking itself just by the announcement. Was it before or after some people at FTX reach out to Binance to say, we have some liquidity issue and we would like to see an operation, a possibility with you? This, I don't think we will ever know. But obviously, I can imagine if a large competition from my firm was coming to me at a point where I have a possibility to put them down, I think once it's all started, it probably pile up on a few aces in his sleeves. So it's true. First, he made this announcement that he was going to sell this substantial amount, but on a few months. Then FTX communicated that they reach out for some synergies. Quickly, the story transformed that it was clear outright help they needed. And CZ basically blasted nuclear the next day, saying we started due diligence. The LOI was non-binding. I'm not going to educate you about what it means, but basically on the first tweet, when they say we have an interest, I remember the conversation internally with our legal team, which was saying, careful guys, this is non-binding. This is just, marketing. And effectively the next day, sorry guys, we did our basic due diligence. Can you imagine in 24 hours what you can see? And it was already too late. Sorry, we're out. Definitely. Obviously, this is nuclear. When you say this after 24 hours, you hardly see the book and you say how much mess it is. Yes. So we suspect that about $9 billion of FTX funds were transferred to Alameda. Honestly, we have very few information about how bad the books of Alameda are. So right now, everything else is rumors.
Okay, no, that's a great overview. So it looks like FTX's main reserves or collateral was just these illiquid assets or tokens, most of which were their own. FTT, I believe, was their native token.
Correct, yes.
Combined with others, some of which no one has ever heard of. So obviously that was a big mistake. People found out, dump, and then you're left with nothing, I guess. And if we had to sort of delve a bit deeper in terms of some of the negative effects which overspilled on some of the other parties, what would you say some of the negative effects due to the FTX saga are, and which type of players, so from small to big to whoever, were affected?
So there's three angles here. One, FTX was a gigantic cobweb of 140, 160 various companies where they had chips in. So the whole of those companies are placed into bankruptcy and things like this. And with the crypto involvement, good luck to the people which are going to do the bankruptcy filing in the US. I think it's going to be one of the most complicated in history.
I think some 130 companies trading subsidiaries for bankruptcy because of the whole structure, which is insane. Yeah,
so that's one. Second, Alameda was surely one of the largest liquidity provider in the world, with the big guys like Cumberland. This is going to create liquidity issues on a lot of tokens. And remember, we are the lowest on the market for months, and we don't need a lack of liquidity when the price are to the bottom. So that's the second part of the problem. The third part is more global. The crypto industry is a little bit under attack from various government and regulation in the past 6 months. Of course, they smell blood and they are trying to take the advantage back, because obviously that whole industry is a threat to the banking system. So there is a lot of players, and SBF and FTX was invited to the table of the government, the SEC. He was a prominent actor in the USA. And now, obviously, I think it's interesting that no one has done his due diligence before. These people at this level got misinformed to a situation like Madoff or like Enron, or to that level of scam and Ponzi and crazy situation. So it's very difficult to know how these people will try to recover. So there is so many angles that it's very random to say what will happen after this.
No, I agree. It's a bit disturbing, obviously, for the US government, who are sort of shaking hands, inviting him to Congress to speak, allowing him to participate in conversations about regulation, when on the other hand, they had no idea what was going on in the back end. So it reflects badly on them as a government.
Sure, not only that, but I'm sure you're aware of the list of investors in FTX.
Of course.
And BlackRock, SoftBank, and it's absolutely crazy that those people trusted 30 years old.
The ride, like with everyone else.
Enjoy the 100 millions here, 100 millions there, and go and party with your friends in the Bahamas, more or less.
No, exactly that.
So,
I mean, you mentioned sort of, you compared it to the history of the past, the Lehman Brothers and whatnot. Many are saying, in actual fact, it's not as bad as the Lehman Brothers because of the percentage of assets in the market and the downfall and investor protection and all that. Perhaps it's more similar to the Enron scandal in terms of the size of it. However, the reasons for the downfall are quite similar in terms of, it seems like we're operating largely on, tactics like shadow banking and fractional reserve lending with basically no oversight.
Absolutely.
So how would you comment? Would you agree that most of the players in the market, unfortunately, do have these tactics and approaches?
It is obviously, I mean, comparing to Lehman Brothers, it's insult to the world of crypto, because we don't have the level of auditing and scrutiny that there was at the time in finance. Honestly, for all regulators, and this is we have to be careful with regulation, not overdo it, because honestly, Lehman has proven time and time again that you can have as much regulation as you want. It doesn't fix the problem of bad actors. The problem is in a different place. How do you audit that the level of governance and those basic rules and basic regulation, we don't need them to be crazy, are absolutely implemented and respected? The whole problem of FTX looks to be 10 people were in charge. But remember, we're in a world of startup. The industry is client facing, I mean, is something like 4 or 5 years old. All these firms, FTX, Binance, Crypto.com, exist for a few years only. And they came from a team of 5 in a garage to thousands of employees in a matter of a few months. And literally, how do you implement the governance inside and things like this? Everyone which has run a startup is aware of this. So the big issue is really the pace at which they managed to have this success. And this question, these investors which put hundreds of millions in the hands of no governance, no audit, no follow-up of those investments, that's show how much money was printed in the last few years and needed to go somewhere. So people were ready to take whatever risk to try to make a short return. So we are questioning here the whole world of VCs, venture capitalists, and things like this. But it's too easy to point the fingers at a situation like even Enron. You had auditors, gigantic auditors and things like this. We hardly know the auditors from FTX or what was conducted. We are not talking about a company which was 50 years old, which is in a very regulated environment. We are talking about a bunch of kids. We were having
so self-regulation,
parties in
and for some reason everyone's
Absolutely.
putting all their pride and faith into this new market.
Yes, so we had Mongox, you remember,
Yes.
the first very large exchange of Bitcoin, a hack in the region of 100,000 of Bitcoins, 170, I think. And it's similar.
Definitely.
You have projects which explode in size. The tech is attack, the governance is attack.
I agree.
There's people doing stupid thing inside and then shooting them in the feet. But
It's
I
like,
can also
will we ever learn, sort of thing?
Yes, I'm French, and I'm sure everyone remember of this trader which lost billions of dollars for Société Générale on some trades. And again, we are in a supposed regulated entity in a very regulated country, and this guy managed to. We to this day, we don't have all the details about how that thing managed to happen, but you have $1 billion in your hands. If there is no proper governance in the company, all sorts of things can happen anyway, regulation or not.
Definitely. No, definitely. I mean, I think we've also shifted in our way of thinking and culture. First, everyone was quite anti-regulation and this anarchic type movement saying we can self-regulate, we can do whatever we need. DeFi, we don't need centralization, we don't need this. And now we're coming to the realization that actually we do need some level of support for investor protection, transparency, reporting, supervision, capital requirements, risk, requirements, which I think people are also slowly starting to change the understanding of the way they think. So I agree. I don't think regulation will sort of definitely keep out bad actors or bad platforms or, saying these things won't happen. But do you think that at least regulating the market in this way will help validate the market better and protect investors obviously better, depending how and where, because there's a lot of fragmentation.
Yes.
But how do you see this playing out?
This is a very interesting question. First, a comment about the crypto industry itself. We have to remember that when regulation is in place, you have two parts in the regulation. The place where the company offering the services is based, and the client it's selling those services to. Usually, when we talk about retail investor, we are asking the regulation to address the localization, the geolocalization of the clients. So you can be in the Bahamas. If you are selling to French, to Spanish, or to German, you have to have a EU regulation covering your activity wherever you do it from. In the world of crypto, it becomes very complicated because the assets, because of the nature of the decentralized assets, you basically can have an entity in Bahamas, but it's not like you got the coins in your safe over there. So there is this aspect, which is already to be taken in consideration. The second part is regulation has become so complicated that we tend to forget very often why does it exist. The point of regulation is effectively to keep the clients safe from bad practice. But how is it implemented? The role of regulators is to look after the entities and the people within that entities and validate if they have the experience, the work ethic, and the reputation to do their job. And then they give guidelines that you need to follow, that you are giving good practice to your clients. That is what regulation is about. Everything else around it, the text make it mega super complicated. But the base is simply we need to bring the trust between the client using a service. I do think there is easy way forward in the sense of regulation. What is my concern is in today's days, because the world is a village, we tend to make things highly complicated and very inefficient on the regulation point of view. And we have to be careful that this crisis is not used to, again, just make the lawyer busy. It's going to be good for you, but not for me.
No, I agree. And those are some very valid points in terms of, regulation and trust. And I think what's important to sort of clarify and highlight is, CeFi versus DeFi. So here, Celsius and FTX and all these collapses mainly happened in CeFi. So we gave, trust and loyalty to a bunch of people management who looked like God. And basically it spiraled out into, in the back end, they didn't really know what was going on. So, many people say, DeFi is so much better than CeFi, so much more reliable. I would say that, DeFi has its own problems in terms of security and these bridges getting hacked, undeniable. However, when it comes to trust, we can see, so the Celsius event taught us a lot. So Celsius had to pay off its DeFi loans first, or else they would lose their collateral, basically. So, it shows us that here, you can't tamper with DeFi and, smart contracts and executions and all these type of, aspects which make DeFi look reliable. However, it's a chicken and egg because it's not ready yet. There's a lot of problems and around the technology itself. So I think we do need both. When it comes to CeFi, definitely regulation is undeniably needed. And when it comes to DeFi, I think, in order for it to replace or compete with traditional markets, we need to improve security. And what are your thoughts on CeFi versus DeFi? Do you have sort of a preference, or do you believe in this utopian vision of everything should be decentralized? Or
no, I very much like the promise of the blockchain. Going back to the roots of the technology. Let's make a ledger public. Everyone can verify the information. It's actually the ultimate AML tool. Everyone is crying, crypto used for rogue transaction, and this. It's all the opposite. Everything is showing on the blockchain. You can validate everything. And behind that, the ultimate point is to give the user the control of his own data. So when we are talking DeFi, I don't like just compartment the conversation to DeFi because it's a very unique example in the sense of investment. Honestly, I really hope it stay an extremely small part of what the blockchain technology is going to build tomorrow. What we need to think about is, by example, how many times this year only have you shared your passport to various entities? I dream of a place where tomorrow we have those information certified on the blockchain and you can share them one-to-one only with the person that needs an information. That link is going to be engraved in the blockchain and you can serve it. You as a user decide to cut tie with your bank, you cut the update of this information. But we can be in a world where tomorrow you move house, you have your new address, you go get it certified by the government once, and every single party that you're dealing with is going to have this information updated. And every single time they want to use your address, they maybe have to pay a few cents to that technology. That is the whole promise. So it goes well behind DeFi. It's the whole Web3 promises and things like this. There's really amazing promises. How it's done, honestly, we have seen that the most serious DeFi projects are the one with a strong governance, where the team are public, so we can imagine that we have a mixed bag, where DeFi entities are regulated, they have a proper purpose, they are a proper tool, and they are audited, certified, whatever you want, regulated eventually, and it's done. So for me, the barrier between CeFi and DeFi exists only today. I do believe that in 5 years' time, we won't be talking about two different worlds, simply because a lot of centralized finance will offer solutions which are decentralized, and all these decentralized which exist today will have joined the rank of public-facing company. Honestly, I remember just 12 months ago, we still have a lot of DeFi projects where we don't even know who are the creators and the programmers behind it. Today, most of the top 10 DeFi are proper enterprise with an address in a street, and you can contact the team and things like this. So I don't want to oppose the two worlds. There is valid point to the two, but the promises of DeFi in terms of giving back everything to the user is absolutely fascinating. Let me give you, by example, a very quick conversation I had this week about this with an actor during my week in Malta at Sigma. Today, you have the hotels which are mostly booked by, let's say, Booking.com, if we can give a brand. the hotels are making a very little profit because all the profits is going to booking.com. But booking.com doesn't exist by itself and make a very little profit because everything is going to Google. And everything is happening on advertising. So you have one gigantic mastodonte, which is Google, which is selling the house for absolutely everything. And the hotels are not in the hand of booking.com. They are in the hands of Google. So what you need to fix is not that chain, which is booking.com, which most of the people are pointing their finger at, is to understand the full chain, how it works, and go to the top. So we can imagine a world tomorrow where we come into solutions where the Web3 is going to give back to each single hotel in the world the keys to having their profit converted, not in the hand of one gigantic company which is serving the whole industry and the others, Airbnb, Booking, all those profits go back to the advertising, and there is only one platform for advertising now in the world.
No, of course, and that is why everyone is so keen to see Web3 succeed and DeFi succeed, because they like the concept of being in control of their own assets, being in control of their own content. So obviously the idea and the vision is there and it's lovely, but there's so much to be solved in terms of, as you mentioned, blockchain identity, in terms of security. So there's a lot of work to be done, but the industry is still maturing. And until then, I think that regulation will definitely help set people on the right path, because at the end of the day, here we're emulating the financial services. So if there's a bridge which is hacked, we're saying millions on the line every single time. So it's just catastrophic with each event which takes place. So just to conclude, what do you think are the main lessons to be learned from FTX? And what are your projections from the market, which is obviously the answer that everyone is basically curious about in terms of when will we recover, if ever, and how. But first, let's say, what are the main lessons from FTX in your opinion?
Honestly, the biggest failure of this whole operation for me is those gigantic venture capitalists, which are managing billions and billions, which have been giving free checks to a bunch of 30 years old with hardly doing due diligence.
Yes.
This is shocking. And I seriously don't know how this managed to happen, because I have been trying to raise funds a few times in my career, and I can guarantee you that the level of auditing I have had is really, really insane. And it's, is it because he was a high profile? Is it because he's connected? What was the reason? But the biggest failure is this. And when we look at a lot of Ponzi and problem in the past, it always came with some people creating a sort of false reputation and abusing the people. I'm not today. I can't say if he did it on purpose, but it looks like we have more and more a clue that he basically tried to go all in. Put everything on the red in the casino and see what happened. Obviously, the black came out, so he lost it all.
I agree.
So
that, and maybe, in terms of the platform side, never to use your own native token as collateral or reserves, which make up most of your balance sheet. Because that, I think, obviously, from a platform perspective, because from a investor perspective or market perspective, the VCs are the problem. But from a platform perspective, that is such a silly way to operate. Like, so much risks.
Yeah. Most of these tokens are being created because they are supposed to be an utility to the platform they serve. Yeah. If the utility is not here or not convincing, or the size of that batch of token is not realistic compared to this, this is crazy. But again, how can some people versed in the financial industry receive a bunch of those tokens and decided, it's an acceptable collateral. Let me let you do whatever you want with my books because I'm so happy with your FTT, which are worth nothing. Technically, that is kind of crazy. But unfortunately, when you study the history book of economics, you understand that it started with the greed, with the tulip back in the 17th century. And then we keep repeating the same pattern again and again. And unfortunately, the human is greedy. And we are going to replicate this again. Unfortunately, it's going to happen again with another industry or in a different format or shape. This is the human nature.
I agree. where hopefully the outcome would be, more transparency. We're seeing all these exchanges coming forth and, producing and publishing what their net assets and their net reserves are, what their composition of assets are. So maybe we will head towards that direction, because investors are just tired, and it's just,
We need to, but, it's a funny exercise, because anyone which has some reserve, let's say a large exchange, is publishing, let's say Binance has published, I think, $65 billion.
Yes.
But no one is questioning if this is all the money from their client. We've seen 65 billion, which looks okay. It's a big entity. They represent what we know. They are large in the industry. But do they have 70 billion, 80 billion of client assets? We've got no clue. So it's very nice that they are showing us one part of the story. It would be very interesting that we got the second part of the story. And this is auditing, this is governance, this is reporting. It's cumbersome, but at one point we have to go there.
I agree, and I think it's coming undeniably. So Samuel, this has been honestly amazing in terms of content. Everyone's been reading and writing about FTX like crazy, and I think we've really put it into perspective. Before I let you go, I'd just like to invite you for a round of I Call Bullshit. I'm going to read out just a couple of sentences, a story, and tell me if it's true or false. So, according to CoinDesk, the insolvent crypto exchange FTX suffered a 400 million exploit right after the filing for bankruptcy protection. The attack was conducted by Sam Bankman-Fried's girlfriend, who was instructed to move funds and meet Sam in Argentina. True or false?
Damn. Actually, I have been so busy this morning, but I saw that there was a tweet that the Bahamas say they got everything under control, so they catch whoever. True?
Okay, so it's partly true and partly false. So it's true that FTX suffered a hack for 100 million.
Yes.
But we think that it's rumors, or these are just allegations if it was the girlfriend who was the hacker. They're quite sure it was an insider trading job because the person had access to cold storage and wallets, but the identity is not confirmed. So this is just a rumor being thrown out there. I mean,
so we need to record this part in an hour, because since I enter here, I know that they find who did it, and it's been made public just when I was entering the building. So
I wish we took a note. We'll do a part 2.
Absolutely.
So thank you very much, Samuel. So for you, the listener, if you would like to contact Samuel Rondot, you can find him on LinkedIn. Also, their website is damex.io. So feel free to get in touch, even if you need any crypto custody and broker services. They're a great provider, and settlement. They're a great provider, and I highly recommend them. So thank you for listening, and stay tuned for the next episode.
Thank you for having me.